Welcome to The Explainer. Today, we're going to dig into the latest Q3 2025 results from KONE, the global elevator and escalator giant, to really understand how they're navigating what is a very, very tricky global market.
And that brings us to the big question, right? This is what KONE is facing head-on. The property market in China, one of their most critical regions, is in a serious downturn. And yet, their latest quarterly results give us a pretty fascinating answer, one that reveals a really smart, strategic pivot in action. So before we jump into the numbers, let's just do a real quick level set. Who exactly is KONE, and what's the scale of their business?
Well, simply put, they're a massive player in how millions of us move through cities and buildings all around the world, every single day. Think airports, shopping malls, huge office towers, apartment blocks. Chances are, KONE is there.
Their whole operation really breaks down into these three main buckets. New building solutions, while that's pretty self-explanatory, it's putting elevators and escalators into brand new buildings. Then you've got modernization, which is all about upgrading older equipment, and finally, maintenance and service, which is the long-term gig of keeping everything running safely and smoothly. Now, you're going to want to keep these three in mind because they are absolutely central to understanding what's happening with the company. Okay, so with that context, let's get to the main event, the Q3 2025 scorecard. These are the headline numbers that really start to tell the story of their strategy. First thing that jumps out, demand looks really healthy. Orders received, which is a great crystal ball for future revenue, grew by nearly 8%. This tells us that even with challenges out there, customers are definitely still signing on the dotted line. And, as you'd expect, that strong order book flows right through to sales. A nearly 4% bump in sales is a really solid result, especially when you think about the headwinds they're facing in some of their markets.
Okay, and this next one, this is a really crucial number. KONE didn't just sell more, they actually got more profitable. Their adjusted operating margin climbed up to 12.3%. It means they're getting better at turning every dollar of sales into actual bottom-line profit.
And this chart just lays it out perfectly, right? You can see that bottom line improvement in black and white. Their operating profit jumped from about 319 million euros last year to over 340 million this quarter. That's a very real, very tangible increase in profitability. So we've got orders up, sales up, profit up. Everything's pointing in the right direction. But the big question remains, where is this growth actually coming from? When we break it down, a really fascinating story starts to unfold. Just take a look at this sales breakdown. For the first 9 months of the year, new building solutions made up 36% of sales. But look at this. The other two slices, service and modernization, together, they make up a whopping 64%. This is so key. The majority of their business is now about servicing and upgrading equipment that's already out there, not just installing new stuff. And boom, this slide right here is the absolute heart of the story this quarter. It's laid out perfectly. Sales from new construction projects actually dropped by 5%. But at the exact same time, sales from modernizing old equipment surged by over 15%. This isn't an accident. They are actively and very successfully pivoting away from a declining market and leaning hard into a growing one. Okay, so we've seen this pivot in their business lines. But what happens when we zoom out and look at the world map? As you can probably guess, the story isn't quite the same everywhere you look.
So, geographically, you can see Europe is still their biggest playground at 40% of sales. But the real drama, the really interesting part of this story is hiding inside that 20% slice for Greater China.
And this table, which we've pulled right from their report, tells the whole story. Just look at the row for China. The market for new building solutions? Significant decline. But look right next to it. The market for modernization? Significant growth. This is that pivot we've been talking about, but playing out on a massive regional scale. They're basically offsetting the new construction slump by going all in on upgrading China's huge number of existing buildings. So, how is KONE's leadership talking about all this? You might be wondering. Is this pivot just a lucky accident, or is it a deliberate, calculated strategy? Well, the answer couldn't be clearer. The CEO, Philippe Delorme, comes right out and confirms it. This shift is intentional, and more importantly, it's working. He highlights that these more resilient businesses, the service and modernization side of things, now make up the majority of the company's revenue. And looking forward, they're really doubling down on this success with 3 key pillars. First up is sustainability, all about cutting carbon emissions. Second is digitalization, things like their 24/7 connected services that monitor elevators remotely. And third, they're continuing to pour money into R&D to develop smarter solutions, which, of course, will likely fuel even more demand for modernization down the road. So with all this in mind, KONE is feeling pretty confident about the rest of the year. They're expecting sales to grow somewhere between 3 and 5%, and they've tightened up their profitability forecast to a really strong 11.9 to 12.3% margin.
All right, we've gone through a lot of data. So what's the bottom line? What are the big takeaways from KONE's performance this quarter?
Well, in a nutshell, KONE is showing some remarkable resilience here. They're actually improving their profitability even while their biggest market for new equipment is shrinking. And they've done it through this very clear, very successful strategic pivot towards the much more stable and growing businesses of service and modernization. It's this shift that gives them a positive outlook, powered by long-term trends like sustainability and smart buildings. It's a classic case of a smart company not just weathering a storm, but actually finding a brand new, stronger current to ride.
And just before we wrap up, a quick but important reminder, this is for informational purposes only and is not investment advice. All the data we've used is based on publicly available information. You should always do your own research or talk to a professional. Thanks for joining us.